Okay, so is there now shop the loan, right?
Yep.
You advise talking to more than just yourself to understand some other products, so you don't all offer the exact same product. Are there differences between you're from two different places? So tell me, do you offer the exact same thing? Do you have differences?
Well, I think there's a big difference between banks, credit unions, and then lenders like us.
Yes.
You know, because with banks and credit unions, you know, a lot of times they'll have overlays. So, for instance, with FHA, you can go up to about a 57 debt to income ratio. Whether it's advisable or not, it depends on the client. A lot of times people will have overtime income, bonus income. It's not seasoned enough for us to count, but they feel comfortable with that payment at that level.
Okay.
Where there may be, you know, some banks or credit unions or other lenders, I guess, will say, you know, even though FHA allows that, we're not going over 50. So that's kind of an overlay.
Sure.
So I think that that's important. But as far as like first-time home buyer money,
Yes.
a lot of lenders don't deal with that. I don't know.
Is it a higher risk? Is that why?
No, it's just a lot more work.
Yes. No, but that's the truth though, right? I mean, that's the full
Right.
transparency. Some lenders don't want to work with the state agencies like the MAHAFAs,
Gotcha.
Minnesota Housing and everything, because there is more work. There is more legwork for it. And sometimes for the margins and how they're ran, it doesn't make sense for them to include that.
Okay.
Right. But for us, once again, what's unique is we do traditional mortgages, and we do some products that we have that are non-traditional mortgages. So traditional mortgages, conventional FHA, VA, USDA, right? And then for us, we still sell them to the same people.
Right.
You know, up to the secondary market are the exact same people. Jenny, Freddie. I mean, they're the ones that we're going to be selling those to. So we pretty much, if Bay Equity can't do it, I probably
You
can't
might
do
not
it
be.
either. Right? And we're going to try our best. We're going to do everything that we can in our
Okay.
powers to make it work. But we, of course, we do have some specialty products. And I think that's the part of figuring out what is the client's
Yep.
situation and then how we can help.
Okay. So if they do go to one lender and decide, well, I want to talk to somebody else, I didn't like what that person said.
Yeah.
And they're going to be very cautious. If you're now the second person they're talking to and you say, okay, well, we have to run your credit, you know, they're going to be defensive
Yeah.
because you're running their credit report again.
Right.
Is it a big impact? Should they worry that you're going to be a little bit different?
Well, it depends on how much time has gone by,
Okay.
for one thing. You are allowed to shop for a mortgage.
Yep.
So,
Yep.
you know, there's varying theories on that, but we usually try to get it within 2 weeks of the other lender.
Yep.
And it's not like we can't, if they know what their credit scores are that we're going to be using, it's not like we can't run some numbers based on that,
Yeah.
you know, and just advise them accordingly.
Sure.
But in order to run a pre-approval, do the automated system, we have to have the credit
Do the
scores.
full scan. Yep.
Yep.
Okay.
And a lot of times, too, to see if they're going to qualify for something that the other lender might not be offering them, we probably need to do it.
Sure.
Yeah.
Yeah.
And let's talk about that part, right?
Yeah.
Hard pull, soft pull.
Yes.
Right? Those are
Thank
the kind
you.
of the ones that people know that in the public, right?
Yep.
So that hard pull is that first one usually because we want to know where your credit is, kind of like you were saying.
Right.
And then you get within that 30 days to get it pulled 5 times on that same credit report. Right.
Okay.
So if anything were to change though, you would need to do another hard pull. So that's a little bit of a difference that a lot of people don't talk about. It's a small nuance that not many people know about, right? But if you are shopping around, once again, trying to find the best rate or best closing costs or just finding who you work well with,
Yep.
right?
Right.
Yep.
Right.
It would not negatively impact your credit pull if you were doing soft pulls.
Good to know.